Hello, and welcome to UAN Governmental Fund Accounting 101. In this video, we're covering Maintaining Cash and Fund Balances, Chapter 2 of 3. Additional chapters in this series are Introduction to Fund Accounting and the Uniform Chart of Accounts. Let's begin. In our last session, you learned that cash is divided into funds, and the total checking account and investment balances are equal to the total of all fund balances. Now we're going to discuss the method of recording transactions to maintain those balances. Let's use our family example. We know that a family keeps track of their bank account balances with a check register and maybe a savings account book. All transactions, receipts, payments, and withdrawals are recorded in these books. That's how a family knows how much they have in the bank. Fund accounting manual books maintain cash and fund balances with a cash journal that contains a fund ledger. All receipts and payments are posted in dated order to the cash and funds. The fund balances must be equal to the cash balance. In UAN, all postings are automatically entered on the cash journal and fund ledger. They always reconcile with each other. On paper and in UAN, the cash balance must reconcile with the bank. This is the left side of a paper cash journal. The left side addresses cash balance and the posting of transactions such as receipts and expenditures that affect the cash balance. The beginning cash balance represents the entire cash balance of the entity, checking and investments. Every transaction that occurs is posted to the cash journal. There are 3 columns under the heading Cash: Debit Receipt, Credit Expenditure, and Balance. When money is received, an entry is recorded in the Debit Receipt column, and the Balance column is increased by that same amount. When payments are issued, an entry is recorded in the Credit Expenditure column, and the Balance column is decreased by the same amount. Next to the cash columns, the date of the entry is recorded. The detail column refers to the source of the receipt or vendor name for the expenditure. You use the receipt number column to record the receipt number. And the POBC column is where you enter the purchase order or blanket certificate number for an expenditure entry. The warrant charge number column is used to record the warrant or charge number for expenditure entries. And the account number column is used to record the revenue or appropriation account numbers assigned to each transaction. Account numbers are discussed in detail in Fund Accounting 101, Chapter 3. So in Chapter 2, in this space, we're going to be entering a fund name instead of numbers to keep the training simple at this point. This is the right side of a paper cash journal, showing the fund ledger section. Each fund has a receipt, expenditure, and balance column. Entries from the cash side of the journal are recorded in each fund's columns, and the balance of the fund is adjusted by the posted entry. Each fund maintains a running balance. At all times, the total cash balance is equal to the total of all fund balances. I know this is obvious, but when a receipt increases the overall cash balance, at the same time it must increase one or more fund balances. And also obvious, when a payment decreases the overall cash balance on the cash side of the journal, it also decreases one or more fund balances on the fund side of the journal. The first recording of money received is entered in a receipt book. In some entities, the fiscal officer is the only person collecting money. In other entities, there are more people collecting money. When there are multiple collectors, each collector should have their own pre-numbered receipt book. A receipt is prepared for each customer that pays the collector. The customer receives the original. The second copy is for the fiscal officer. The final copy remains in the book for audit. And all receipts are accounted for, even if they're void. Here's an example of our zoning inspector turning in daily receipts to the fiscal officer. These receipts would be accompanied by a duplicate bank deposit ticket. The zoning inspector wrote receipts to each person that gave him money as indicated by his receipt book numbers. Then he deposited the money and turned the documentation in to the fiscal officer. In a village, there may be a utility billing clerk that handles the utility collections. If they have a billing software, they would probably not write separate receipts for each customer, but enter the customer's payment on their account in the billing software. At the end of the day, they make a deposit for the collections and give the fiscal officer the total posted to the utility software that includes the collection breakdown. On this page submitted to the fiscal officer, we see separate amounts for water and sewer and the total for the daily collections. This would be accompanied by the duplicate bank deposit ticket. We'll review the daily collections from all sources. Our first group is from the zoning inspector for zoning permits for the 3 receipts from his receipt book with a duplicate deposit ticket for the total. The fiscal officer reviews the zoning inspector's receipts and determines the total amount and the revenue codes that will be used. Our second item, the fiscal officer received a check in the mail for cable franchise fees, deposited the check at the bank, and will post the receipt directly to the fiscal officer's receipt book with a revenue account assignment. And last, we have the cemetery sexton's daily deposit for lot sales and different fees receipted to his book with a duplicate deposit ticket for the total. The fiscal officer reviews the information and determines the revenue account distribution. Now we explore how the fiscal officer prepares receipts from these sources. In the UAN software, there are 3 types of receipts. Standard is used for almost all receipts. Memo is used when you receive a net distribution. You post the gross revenue and the fees charged against the gross to arrive at a net distribution. The third type is interest, used only for the posting of checking and investment interest. Let's take a look at what the fiscal officer's receipt book looks like. The fiscal officer's receipt book has a different format. Receipts are still sequentially numbered, the date and amount are entered. We see these items at the top of the receipt on the screen. The source of our first receipt is the zoning inspector, not the 3 customer names on his individual receipts. The for area describes the items collected, such as zoning permits. On the left side at the bottom is where the fiscal officer enters the breakdown of the receipt by revenue accounts. On the right side, the fee accounts area is only used on a memo receipt where charges against the gross revenue would be entered. Of course, the fiscal officer should always sign receipts. The second fiscal officer receipt is for the cable franchise fee check received in today's mail and deposited by the fiscal officer. The receipt contains the revenue account distribution in the bottom left corner. The third receipt is from the cemetery sexton for his daily collections and deposit. Notice the description in the for area lists the different types of revenue, and in the bottom left corner, the revenue is posted to 3 different revenue accounts. This is just a sample of multiple account receipts. At your entity, these items may not post to 3 different accounts. Once the daily receipts are prepared, they're entered into the cash journal. Manual books require each receipt to be posted to both portions of the cash journal, cash and fund. This is an example of how the 3 receipts are posted to a manual cash journal, cash side first. Receipt amounts are entered in the debit receipt column, and the cash balance is updated with each entry. The date, detail, receipt number, and revenue account areas are completed. The receipts must also be posted to the cash journal fund side, to the funds that received a portion of the revenue. The general fund has 2 entries from cash journal lines 2 and 3. In the fund's receipt columns, those amounts are entered, and the fund balance is updated with each entry. The gasoline tax fund didn't have any receipt postings. We see the fund balance carried forward unchanged. The same is true of the road and bridge fund. The cemetery levy fund has 3 revenue account entries on line 4, 5, and 6. Each entry increases the fund cash balance. The remaining funds have no share in the receipts, Their balances are carried forward unchanged. Remember that the UAN software always keeps the cash journal and fund ledgers reconciled, but when posting to a manual cash journal, the fiscal officer must balance each page in order to carry the balances forward to the next page. Then the entire month is reconciled with the bank. Manual books require verification that the total fund receipts on the fund side of the cash journal are equal to the total posted receipts on the cash side of the cash journal, and that the total ending fund balances on the fund side of the cash journal are equal to the total cash balance on the cash side. If an entry doesn't balance, that means I've made an error. I would have to find and correct the mistake before moving forward, or I won't reconcile with the bank. Now let's talk about payments. Payments are the way we spend money. There are two types of payments. Warrant is the term used for payments made by check. An electronic refers to all payments not made by check, such as bank fees or online payments. You didn't write a check, but the money came out of your bank account. These items must be posted to your books as payments. The fiscal officer prepares payments for board approval at their meeting. We're going to review 3 sample warrants the fiscal officer issued from the outstanding bills. On the screen, we see warrant number 1309 to Company Inc. for miscellaneous supplies purchased for multiple departments. The top portion of the check shows the amount, warrant number, date, vendor, and signature area. The bottom portion of the check, usually referred to as the voucher portion, has 2 sections that document the details and distribution. Under payment details, we see what was purchased. The total of all items is equal to the payment amount. Under payment distribution, we see the allocation of amounts to appropriation accounts and purchase orders. The total distribution must also be equal to the payment amount. Again, account numbers are discussed in detail in Fund Accounting 101, Chapter 3. So in Chapter 2, in this space for account numbers, we will be using a fund name instead of numbers to keep the training simple. The second warrant, number 1310, to Road Company, is for road repair and line paint for the Town Hall parking lot. Under payment details, we see what was purchased. And under the payment distribution, we see the appropriation account and purchase order distribution. The payment, total detail, and total distribution must be the same amount. And the final warrant, number 1311, to Gasoline Company for fuel delivery, shows the payment details listing what was purchased, and the payment distribution allocating the payment by fund and purchase order. The payment, total detail, and total distribution must be the same amount. In a manual cash journal, the fiscal officer enters the warrants to both sides of the cash journal, cash and fund. And remember that the UAN software automatically enters and posts the payments to the cash and funds. The cash journal already contains the receipts that were posted earlier, and they now contain the 3 payments 1309, 1310, and 1311. On our sample on the screen, each payment is allocated to the fund that's shared in the expense, but we would be using actual appropriation accounts. Notice that the cash balance is reduced by each posting. At the bottom of the expenditure column, we have the total posted to the page. Let's see how these items post to the fund side of the cash journal. Each fund section already contains the receipts previously posted, and now the payments are added based on the fund allocation. Each fund balance is reduced only by its share of a payment. The general fund on the screen has items allocated from lines 7, 11, and 12 of the cash journal cash side. The fund balance is reduced only by the entries posted to the fund. The gasoline tax fund had no receipt or expenditure postings on this page, so its balance is unchanged. The road and bridge fund receives postings from lines 8 and 10 of the cash journal cash side. The fund balance is reduced only by the entries posted to the fund. The cemetery levy fund has the postings from line 9 of the cash journal cash side, and the fund balance is reduced only by this entry. The fire and EMS Road Debt Fund and Cemetery Bequest Fund had no expenditure postings on the cash journal cash side, so their balance remains unchanged. In the UAN software, all posted payments are automatically entered on the cash journal and the fund ledgers. You don't have to reconcile them to each other. But when posting to a manual cash journal, the fiscal officer must balance each page throughout the month, then the total month is reconciled to the bank. Let's see what it looks like to reconcile our payments on the cash and fund sides of our cash journal. The total fund expenditures on the fund side of the cash journal must be equal to the total posted expenditures on the cash side. And my total ending fund balances on the fund side of the cash journal must be equal to the total cash balance on the cash side. If an entry doesn't balance, that means I've made an error. I would have to find and correct the mistake before moving forward, or I won't reconcile with the bank. Now that we know our entries balance on the cash and fund sides of the cash journal, we're going to discuss the monthly bank reconciliation. Each month, the fiscal officer receives a bank statement for the bank accounts and investments. Interest and bank charges are posted to the cash journal, distributed to the associated funds, and the month's totals are calculated. When reconciling with the bank, the fiscal officer must compare each item on the cash journal to the cleared items on the bank statement and must correct any posting errors, list all outstanding items, and clearly document all discrepancies. True reconciliation with the bank is required. Entities that are not reconciled may be considered not auditable. Let's take a look at a sample bank reconciliation. An entity keeping a manual cash journal starts by verifying the cash balance. Take the beginning of the month cash journal balance, line number 1, add all the posted receipts, line number 2, subtract all posted payments, line number 3. This should be the ending cash balance on the cash journal, line number 4. Next, you must add all of the bank statement's ending balances together as they're listed in number 5. Note that all of the investments are included in the reconciliation, even the non-spendable cemetery CD, because they make up the total cash balance. Next, you would clear on the cash journal, probably by a check mark, all of the items from the bank statement. Any items that did not clear the bank would be listed as outstanding. The outstanding items would be listed as line 6, deposits in transit. This refers to receipts posted to the cash journal that didn't clear the bank, and we'll discuss this further in a moment. Line number 7, we subtract any outstanding payments. This is common and doesn't usually indicate a problem. And line number 8 would be only required if the bank made an error and is correcting your account in the current month. Line 9 is the adjusted statement balance, meaning we took all statement ending balances from Area 5, added or subtracted outstanding items or bank errors to arrive at the line 9 adjusted balance. If line 9 is the same as line 4, you are reconciled. If not, you must find and correct the mistakes. As you can see at the bottom of our list, you must always document for audit any deposits in transit, outstanding payments, or errors that the bank will correct. As promised, we'll talk a little more about deposits in transit. This can happen on the last day of the month if you make your deposit after the bank has changed to the next banking day. This is simply an outstanding receipt that will clear on your next bank statement. However, it could represent a failure to take the deposit to the bank. The fiscal officer reviews the outstanding receipts and found that the zoning inspector turned in receipts on January 5th for $85, but it didn't clear the bank. The fiscal officer calls the zoning inspector to ask why the deposit hasn't cleared. The zoning inspector looked on his desk and found the deposit he forgot to take to the bank. So he immediately takes it to the bank, and now it will clear on the next bank statement. So we understand that all deposits in transit don't necessarily indicate a problem, but they need to be reviewed and documented, and you must follow up when you find something that needs to go to the bank. The fiscal officer should always maintain a list of outstanding payments and follow up with vendors or employees when warrants haven't cleared the bank in a reasonable amount of time. The warrants may have gone missing in the mail or been accidentally destroyed or lost, requiring action on the part of the fiscal officer to stop payments at the bank and reissue a new payment to the vendor or employee. An outstanding electronic payment would indicate that you posted an electronic payment to your cash journal and intended to make an online payment, but may never have gone to the website to set up the payment. Electronic payments should only be posted to your cash journal when you're actually making the online payment. Let's review what you've learned. Receipts and expenditures are entered on the cash journal. Cash and affected fund balances are changed with each entry. Total cash balance is equal to the total of all fund balances. Monthly bank reconciliation of all cash is required. This concludes UAN Fund Accounting 101, Chapter 2.